So have you been thinking about investing in the stock market, especially on this week when things have been crazy? So some of you could have been scared to death about the stock market, and some of you could have been more interested in what is happening in the stock market. So people do make money through stock market. People invest in stock market. There are many ways of making money in the stock market, which I'll talk about. Not many ways probably, but just a few ways of making money in the stock market, which I will discuss. But is this something you've thought about? Is this something you're doing currently? This is going to be a video about stock market for beginners. So you want to invest in the stock market, you want to start making some money, you want to enjoy this process that people get out of the stock market, out of shares, out of these amazing companies that are out there that you use every single day. So my focus for this video will be stock market for beginners. You want to start investing in the stock market, you don't know where to start, you don't know what to do, and you're thinking, how do you even make money in the stock market? So it's a pretty straightforward process, and you just need to be very, very simplistic in your approach, and then you'll make money in the stock market. But again, discussing this on a week when the stock market was crazy is like weird, because the stock market had like a proper sell-off on Monday of this week. We are shooting this video on a Saturday. There was a proper sell-off on last Monday in the stock market, and then there was a proper rebound. And that's one thing I want to discuss later in the video, on how you need to approach investing in the stock market if you want to make money, and if you want to be very consistent with it, and if you want to be successful with it. So of course, this kind of money matters. Here we talk about the money mindset, how to make that money, how to enjoy that money, how to manage that money, how to invest that money, and how to assure yourself of a lifetime of income. Basically financial freedom. The only thing we're going for here is freedom, having that money flowing in consistently, and not waking up to make every single coin, in your life. So I want to talk about the stock market. A lot of people have been calling me asking about the stock market, how they want to invest in it, and I thought, you know what, I haven't done a video this year just explaining the process, how to make money in the stock market, and what you might need to do if you want to get started. And that could be a good video for most people. So without further ado, how do you invest in the stock market? Or before we get into how do you invest in the stock market, is how do you actually make money in the stock market? And what is the stock market anyway? Stock market is basically where you buy company shares. So all these amazing companies do sell their shares publicly to people so that they can raise money for their companies. So they sell their shares. So it's basically these shares being listed publicly. They're out there for everyone. You need to buy part of these companies that are listed publicly. And some of them are private as well, but that's a different discussion. But these ones that are public companies, they are raising money through that means. They're raising their capital by selling out their shares. So basically you become part owner of that company, however little it could be. So that's simply it, nothing complicated. But how do you make money in the stock market? So that's the big question, right? So there are different strategies and there's different approaches to making money in the stock market. You could buy a company shares because they give dividends. So that's one way. Dividends are basically just proceeds that are shared with shareholders. So the company could say, oh, we've made so much money. Coca-Cola would say, we've made so much money this year, we've made so much profit, let's share some of this profit with all our shareholders. And despite what tiny place you hold, you get a particular amount based on your shares of that particular dividend. So dividend is basically the proceeds of profit that is then shared by the shareholders within the company. So some people invest in companies that give dividends. Not all companies will give dividends, but most of them, most of the stable good companies will pay you some dividends, and some people get their money and their returns from those dividends. And if you have loads of them, you could actually be living off your dividends. So that's one way of making money. The other way that most people go for is capital gains or capital appreciation, whereby you buy a particular share. So let's say you buy Apple or Facebook or Coca-Cola or whatever company at a particular price. Let's say it's $100 per share. Tomorrow it goes to $200, which is a big move, like 100% increase. That's not very normal, but yeah, you get the gist. You buy a particular share at a particular price. Tomorrow or the next day or next year or next month, it goes to a different price higher than what you bought it for. You just realize what we call capital appreciation, meaning that particular asset you bought has appreciated, and therefore you're in a position to make some money out of it. So obviously, if you bought at 100 and you're going to sell it at, let's say, 200, you made money. That's appreciation of that particular asset. You've just made. So those are the two main approaches to making money in the stock market. So if you ask me, how do you actually make money in the stock market? That's exactly how you make money in the stock markets. So the thing about dividends is that most people reinvest those dividends into the company, and then they grow and accumulate and they get more and more and more money. Of course, some people also spend the dividend because that's their income. So that's fine. It depends on what you want to do with the money. You want it now, that's fine. You don't want it now, you can accumulate the dividends and reinvest. Even the capital gains, you can just let the money stay there as you continue piling it up more and more. So the second thing about stock market is always there's this thing that you want to buy low and sell high. Like I explained, you want to buy low and sell high. That's the second principle in the stock market and how you want to make money. Buying low means that at the time that you're buying it, you're hoping that the asset is going to appreciate. Now, most of the time, it's just speculation because you never know what happens to the company. But you don't want to buy a company that is too overvalued, and then what happens when you buy it, it comes down, then you lose money. Because remember, if you buy at 100, there are also chances that the price could also go down, and therefore you could lose money. And that's the reality of a stock market or of any particular share. So what you need to do is try to buy low and sell high. Most of the time the question will be, how do you determine the low? And that's why you have to be very specific on your approach to investing. You have to know what approach are you going to take towards your investing. So yes, you can buy low and sell high, and if you're in a position to determine, because there are factors you could use to determine if a company is overvalued or undervalued, then you could do that. But I'll discuss other approaches that could then help you to do it in a more simpler and a more efficient way without worrying so much about, are you buying low or are you buying high? So that's something you might want to think about before you start investing in stocks. Then when investing in the stock market, you want to avoid the herd mentality. There's this idea of people just doing something in the stock market for the sake of doing it. So you hear a lot of people are buying Bitcoin, you rush into Bitcoin. You hear a lot of people are buying gold, you rush into gold. You hear a lot of people are going into real estate, you rush into real estate. You heard about the internet bubble that happened. So you want to avoid speculative bubbles when you're in the stock market. You want to have a very simple, straightforward investing strategy that will avoid that hard mentality that takes you towards a particular direction. So for example, the week that has gone now, so for example, this particular week, on Monday, there was a proper sell-off in the market, and there were fears of recession, there were fears of, unemployment going up and employment slowing down. There were fears of, the Fed coming up to, mess up with the economy or trying to manipulate the economy to whichever direction they want to. So there were so many issues, and then there was proper sell-off of companies. So companies like Nvidia, Apple, Amazon, Google were down almost 5%, 6%. It was crazy. Everyone was selling their stocks, and this is just a hard mentality. It's a fair thing in the market. That is something that happens so much in the stock market. And if you want to invest in the stock market, you have to be sure that you are ready for these kind of moves, because the stock market will never just go as a straight line. It's always going in like zigzaggy way. So it goes down, it goes up, it goes down, it goes up, depending on people's emotions. The markets are basically emotionally controlled. People feel this way today, they feel this way about a particular economy, they go and sell it off. They feel strong about that economy, they go and buy stocks. And most people also have this fear of missing out. So the moment people are buying stocks and the market is rebounding, that's when they get in. And that's what I was saying earlier, you want to be buying high. So you have to have that emotional strength or intelligence and know that, the market has always rebounded and gone up. If you look at history, despite the recession periods, despite the depression, despite the COVID periods, despite those times when the market lost almost 20% or even more, it rebounded very fast. Even this week was a good example when the market actually went down. Within a few days, actually within one day, the market was already rebounding to other good levels again. So that tells you that you need to be very stable in the market. You need to know what you're doing and not just follow that hard mentality. So the main thing here is that you want to avoid noise. Avoid noise in the market. Once you're investing in stocks, avoid too much noise, avoid too much news, avoid listening to so many analysts saying different things. You need to be very focused, you need to be very stable, you need to know exactly what you want to buy and hold it for the long term. If you're buying for long-term purposes and that's your investment strategy, continue that way, because you can tell the direction of the market will always go towards a positive side. You will always get money out of the stock market. So avoid noise, avoid speculation, avoid all these people telling you or selling you fear and telling you what will happen in the market. And then of course you want to diversify. You don't want to put your eggs in the same basket. So for instance, if you go into the stock market and just buy Apple stocks or buy Amazon stocks or buy Nvidia, because Nvidia was doing so well, but then it was pushing the stock market quite high because it was doing really well. And then what happens? One day people have this fear about these chips not being produced in time and everything falls down. And if you had everything within Nvidia, you end up losing so much money and getting scared. So don't put all your eggs in one basket, as they say in the stock market. You want to diversify. Diversification here would mean you go to different asset classes, you go to different things, you go to different companies, you go to different regions. There are many ways in which you can diversify, and I can talk about that in a different video. But diversification is key. You don't want to go and put your money in the same thing unless you really believe in that company and you are probably part of it. there's no way you can know how the company will be in the next 1 month, 2 months, 1 year, 2 years, 3 years. And when we're talking about diversification, do not over diversify. Do not go into so many companies that your money is spread thin. I tell people this all the time, that don't spread thin your money, because the money is stronger as a bulk. So when you have more of it in a particular asset that's doing well, then you make more money. You don't want to spread thin your money. The over diversification is a real threat. Most people take this diversification idea to another level, whereby they just spread their money all over the place despite how much money it is. The thing is, you want to buy something like a basket of stocks. So it could be an ETF, could be an index fund, and that way you are well diversified within that particular single index. But buying a load of individual stocks might not be the best way to approach it if you are starting a stock market investor. So don't over diversify. Then the other thing is, try to use tax advantage accounts. So because there are so many incentives about investing in different countries, depending on where you are, whether in Kenya, abroad, in the US, in the UK, Canada, wherever, there are so many advantages that the country gives to those who are investing in the stock market. So make sure you are investing in this tax within those tax advantage accounts where there are some incentives. If you don't have to pay tax, don't pay. If the government is telling you that if you invest here, you won't have to pay tax, then don't pay it. There's no reason to. Make sure that you're not investing in a place where you're going to pay so much tax once you get that capital gain, while there are options of investing in places or accounts where you could pay much less tax or not pay any tax at all. So make sure you take advantage of those incentives provided by the government when you are living in a particular state or country. So these are some of the strategies you want to follow while investing. But how do you actually go and invest? That's a very simple one. You need a brokerage account. I've explained that on so many videos. Look for a brokerage account that has or offers the stocks that you're talking about. There are so many international ones. There are many local ones. Look for a brokerage account. Do your research well. This is the bank that will basically be holding your money. Once you've done your research on a brokerage account, the next step is basically to get information on what strategy do you want to take with that approach to investing in the stock market. Do you want to be an active investor whereby you're trading them? Do you want to be an individual stocks investor? Do you want to be a long-term investor? Do you want to be a passive investor? Do you want to be speculative investor? It depends on what you want. There are many different approaches. I would advise that you take the route of a passive investor. Buy index funds, buy ETFs, or buy some individual stocks that you really believe in and you've collected so much information on and you trust them, and hold them for the long term. That way you get to realize your gains in a much easier way and without too much stress or fear or emotional attachment to these stocks. So depending on how you want to approach investing, get your brokerage account. Once you do, decide on which investment approach you want to take, fund that account and let it be. It's as simple as that. And if you're in Kenya, for example, or you're a diaspora that is outside Kenya, there is FX Pesa down below. There's a link. You can click on that and you can always invest in most of the stocks I'm talking about, or ETFs or index funds. And if you don't know what these things are, I will be doing videos to follow up on this. So stay tuned. Anyway, that's stock market class, a quick stock market class for beginners. And I hope it's helpful. Ask many questions down below and let me know if you investing already, starting to invest, thinking about investing, or what's your plan, or you just fear the stock market and you can't even stand it. Let me know. Ken's Money Matters, I'm out.